Today we'll be taking another look back at ASX listed stock Castle Minerals, ticker CDT, performing some technical analysis and making some predictions on where we can expect to see CDT go in the near future. Let's get into it. Welcome into the Castle Minerals chart, guys, and as you can see, the last time we took a look was the 4th of January, and our prediction was we were going to form a bit of a cup and handle pattern, or we were going to see a breakout. I thought most likely we were going to see that handle form itself, and whilst yes, we did manage to break through our first key point of resistance, which was at 0.037, so 3.7 cents, we did bounce back off this key point here, which was of course sitting at 4 cents, and the following day we fell into that exact spot that we had anticipated we would within that handle, even bouncing off the bottom of that point as well. But it looks like this was a lot more bullish than everyone had anticipated, and instead we cracked that 4 cent mark on the 6th of January, continued upwards, traveled sideways for a bit, and the handle formed almost a little bit higher, as you can see up here, which is quite interesting because when you zoom out, you can obviously see the top end of the cup over here does not reach that high, but we still have a cup and handle shape form itself in that sort of a manner. Overall, that is looking really good, and that handle itself has actually managed to break out. So what I'm going to do is put in place from here the actual cup shape that you have been able to see right about there, and of course from that point where we have our nice handle which has formed itself just a bit higher, as you guys can clearly see right there. So all in all, looking pretty good. Actually, I'm just going to straighten that one up just for argument's sake. There you go. There's our nice cup and handle pattern which had formed itself, and of course that handle has broken out now as well, and we hit yesterday an all-time high for this stock, which was sitting at a value of 4.9 cents. So congratulations to all holders. We've now fallen back down to the 4.2 cent mark, but this is a good thing. We are seeing a test of the top end of what is our handle. That is natural, that should occur, because basically what that means is it's going through a small period of consolidation. Some traders are getting out, but we've seen that this is a key support point for us, and it is now acting as a place for us to be able to hold up the price. Furthermore, I believe there is one new horizontal point of support as well, which is actually the value we are sitting at right at the moment. As you can see, 4.2 cents is a very integral part of this run, and as it is acting as a piece of resistance here, it is acting as support consecutively on multiple occasions, and obviously another hard point to get through. So right now that is a really big horizontal support point for us, given we bounced off the handle, and hopefully what we're going to see is this now holds up where we're sitting at 4.2 cents. We should be able to start moving in an upwards direction from there. Interestingly enough as well, there was a bit of a gap that had formed. The gap that had formed was just here on the 19th of Jan and the 20th of January. So the day high on the 19th was 4.1 cents. The day low on the 20th of January was 4.2 cents. That little down tick to test that, little bit of a handle we had was able to close that gap. So that is absolutely fantastic. And that basically means we can continue moving in an upwards direction starting from now. So all in all, things are looking relatively good for this stock in the short term at least. I'm thinking as well we might even be able to put in place a little bit of a trend potentially if we get a bit more data, I suppose, coming through, maybe from this point here on the 21st of December, something a bit like that. As you can see, it intersects some key points for us here, and I think this could be our new uptrending line, should obviously the buying momentum which we have seen over the past couple of weeks continue to flow in. Let's have a quick look at a few more indicators now as well. First and foremost, RSI. And I want to look at this first because, of course, there has been a lot of buying action. We've broken out. So have we fallen into the overbought range? And yes, we have been overbought, but we've come back down now and we're currently sitting at an RSI of 62.47. And whilst I do think that is still on the higher end of things, if we're able to move up in a slow and consistent manner rather than having, large spikes as we saw in this breakout here, we will continue to uptick in this sort of a direction, in that sort of a style as well, of course. Let's have a quick look as well now at the MACD, moving average convergence divergence. And as you can see, we've had a beautiful green period here. The start obviously of our breakout was on the 29th of December, or I suppose the uptrend. And that's when the cross occurred of the 12-day above the 26-day. What you are seeing now though is the 12-day is coming back down towards that 26-day EMA. Now, that is probably the first major indicator that is showing that, hey, maybe we aren't going to continue uptrending as quickly as we have been. But as you can see from this red period, you can get your peaks and it will still continue to move in an upwards direction. So taking this into consideration, what is my price target for today's video? Well, simply, first and foremost, I want to see this 4.2 cent mark hold up. Then secondly, what I want to see is moving upwards, but not in, I suppose, a sporadic way. I want to see it move up slowly and cautiously. That means the RSI won't go crazy, and it also means hopefully the MACD won't cross as quickly as well, or alternatively we may start seeing it moving in a sideways direction. But all in all, the actual price target that I'd be going for immediately is the high that we had seen on the 6th of January. That high was at 4.5 cents. You can see this was once again touched over here on the 20th of January, of course the 21st, and we're below it at the moment. So I think that is probably our first major point of resistance that we need to try and hit before we can continue to break out and move forward. That wraps up today's analysis on Castle Mineral, guys. I'd love to hear your thoughts on it down in the comments section below. Of course, if you did enjoy today's video, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.